If you're a 20-something young African like me with savings so little that they may not be able to help you purchase a house or even something small like livestock, you might be wondering if there is a way in which you can start small and grow your savings. Now, in a common setup where I come from, people grow their crops throughout the year and they harvest and keep the food that they need and sell the remaining as a surplus. After they sell, they either keep their money as cash or they buy something which they consider to be of value. In agricultural societies, this is something like buying livestock. But of course, if you are someone who is coming from a country like the one where I come from, Zimbabwe, which has one of the highest levels of inflation in the world, then you will know that keeping your wealth in cash is definitely a non-starter. You will soon lose all that money, and with it, you will soon lose your wealth. So the only option that you'll be left with is buying cattle. But then again, if we're going to be really more practical about it, cattle might not be something that you can buy if you're someone like me who has been a global citizen for the past couple of years. So you see, I need to be able to figure out a way to take the little savings that I have and grow them in a way that allows me just to deposit this money and have it work for me while I'm peacefully sleeping and concentrating on other things that I'll be doing around the world. And that brings me to the topic of today, which is the stock market. If you are new here, welcome. My name is Maro, and before we start, do not allow Dorothy to populate the comment section before you do. So make sure that you go there, you comment something as we are starting to mention that you are here, you smash the like button, and we get into today's topic. Now, to start with, the stock market is easy, it is convenient, and it's something that can be done without you being on the ground. Can you imagine a situation where you have $1,000 in savings, you're about to leave the country, you really want this money to work for you when you leave, but you really want to keep the costs so minimal in paying someone else to be able to invest this money for you. If you look at something like real estate, you're definitely out. You're not going to be able to buy a house with $1,000. If you're looking at cattle, well, you might run around and buy like two. It's reasonable, but at some point, depending on the breed, you might even just be able to buy one beast. If you're going to be buying one cow, or if you're going to be buying, 10 goats, you're not going to be able to really make so much money for you to have enough money to pay someone to take care of these animals while you're away. But if you look at it in the stock market, you can leave your $1,000 with the CEO of one company. So when you look at this, then you're really looking at a way that is so much easier for you to be able to leave your investments, no matter how small they are, and allow them to work for you. The other advantage, of course, is you're seeing here is that you're not actually paying the CEO who's running the company. The CEO will be there whether you give them your money or not. But ultimately, this is a really low-cost way for you to start, especially when you don't actually have a lot of resources to be able to lay off and a lot of expertise. You're looking at giving money to people who are already hired and screened and who are working very hard and whose jobs depend on growing these companies. And what you're doing is simply just giving them your money so that they grow it with everyone else's money with it that is already invested in the company. Reason number 2 is liquidity. Liquidity is something that is described as how you can easily sell something in an emergency. You always want to make sure, of course, that as part of your investments, you're keeping some things that you can easily sell. When we're looking at the asset classes we've been talking about in this video, if you have a house that you own and you've been renting it out, but you decide, you know what, I'm getting out of this market, I want to sell this house. Anyone who has ever tried to sell a house knows how hard it is for you to be able to sell it. It's actually not just going to be a minute thing where you will get a buyer who is willing to buy that house and you'll be able to agree at an agreed rate. So definitely a house is something that is not even liquid enough. When you're looking at another example that we have given here, the cattle that we have given, it's also not going to be that easy for you to just quickly get these cattle sold. You're not going to be calling, your farm manager and say, let's sell the cattle today. They're going to need those to be cleared by the veterinary services. They're going to need those to be cleared by the police. And then you're going to need to find a buyer. You're going to need to find people to slaughter it and take it to a slaughterhouse or a butchery. And then after that, can you weigh the carcass and have the payment given to you? So that's definitely something that's going to take you time. But if you look at the case of a stock, if you call your stockbroker in the morning and tell them that you want to sell, it's likely that you will have that stock sold that day and have that money wired to you the next day. So this is the liquidity that we're talking about. Now, if you have watched any of my previous videos, you know, of course, that I am not really a big advocate for selling. Or at least I'm not an advocate for selling in the short run. I really consider all my investments as something that I will hold for the long term and as investment that I will dispose of in the long run. Of course, the question would be, what is the long run? The renowned economist John Maynard Keynes famously said, in the long run, we are all dead. What I consider to be the long run is something like 20 to 30 years. And you might ask, so how will you be benefiting from the market within these 20 to 30 years? This brings me to my point number 3 as to why I invest in the market. And this point is the fact that within these 20 to 30 years when I'm holding on to these stocks, most of them will actually be giving me other returns in the form of dividends. So you see, dividends are sort of, a very interesting concept. When a business trades throughout the entire year, it usually does make a profit, or at least we expect that the companies that we pick and have in our portfolios are actually making profits. When these profits come up, there are two things, broadly speaking, that the management of the company can do with these profits. The first thing is that it can take these profits and plow back into the company. They can buy more machinery. If they're a telecoms company, they can upgrade their network from 4G to 5G. But secondly, another way in which they can use this money is that they can actually give it back to the shareholders who are the owners of the company. You and I, who would have bought shares within this company. So this is something that is very interesting and very unique to this asset class in such a way that once you actually get in and you get into the companies that actually do pay dividends, then you have the ability to live off of the investments that you have made without actually making further investment. And now, from what I have said, and of course from my previous videos, you might reason out and say, you know what, look, Maro, you know this market. This is something that you have studied. These are things that you talk about. But that doesn't mean that this market excludes those who don't read about it. That doesn't mean that this market excludes the people who are beginners in this business. There is actually a way in which you can participate in the stock market without actually being a pro or a nerd of the market. And what I mean by this is the fact that you can actually participate in two ways. The first one is you can hire someone who is a professional, someone who is trained. If you look at most African stock markets that we have, definitely all the 8 African stock markets that I am invested in at the current moment, what you will see is that in those markets, there are stockbrokers who are these middlemen and middlewomen who help you in buying and selling of your shares. Most of those stockbrokers also do double as registered financial advisors. What that means is that even without knowing, but while having a little bit of the capital, what you can do is you go to the stockbroker and say, look, I'm opening my account here and I want to buy shares in the stock market. Where can I buy? What do you advise me to do? The stockbroker is going to come up with a list to you. They're going to give you a list and say, these are the companies that we recommend that you actually buy. This is why we're recommending these companies, which means that they will give you information that is backed on by research. The second way in which you can participate without being a professional is by buying what I call baskets of shares. So we're looking here at things like index funds and ETFs. So if you're going to be buying 50 companies that are the biggest trading companies in Zimbabwe or in Botswana or in Ghana, then what you're doing there is you're spreading your risk on 50 companies that are already trading on the stock market. So when you look at that way of investing, this is a way in which you're really just saying that, look, I'm a novice. I don't understand which of these 50 companies is going to come up at the top, but I am willing to bet that by these 50 companies being 70 or 90% of the market, I think that I am putting my eggs spread out in enough baskets that I'll actually rise as the market itself rises. My fifth reason for liking the stock market compared to many other asset classes that we have, especially on the African continent, is the ease and availability of data. You see, data has become very important in the lives that we live in. On my YouTube channel, when I'm deciding what videos to actually make for you guys, I look at the data. I look at the data of what has been happening in the past, which videos have you guys been responding to, what have you been leaving in the comment section as something that you want. That is definitely data that we consider. Of course, when the politicians are deciding how to spend their campaign funds. They're also looking at social media data. What are people clicking on? This is what's going to help them drive a campaign message. And this is something that has even helped people win elections. So data is something that has become very important. But when you look at many other asset classes, you're looking at livestock. What data would you want? If I'm going to be buying cattle, I would definitely want to be interested in understanding, look, when was this cow, or when was this bull or steer, when was it born, how has it grown over time, what has been the weight, when was it sick, what is the genetic makeup. But in most cases, the sellers that you find in the cattle business will not have this data at all. If you're buying a house, you might want to know, look, when was the house built, who designed it, who is the architect, has it ever had any repairs done, and who did these repairs, what were the wirings, and everything else. See, things that you want to understand about real estate as you're getting into that business. Again, in most African setups, you won't find this data for the things that you'll be trying to invest in. But the stock market is quite different. The companies actually are required to furnish investors with all their past financial data. In most African countries where things have been stable, then you will find yourself with 10 or even 20 or 30 year track record of results, financial results. You can put these results in Microsoft Excel. You can graph whatever graphs that you want to do and analyze this data. See how this company has really grown over time. See what the business has been doing before you even decide to put in your money. Now, if you made it to this part of the video, I'm very curious if you have been convinced that the stock market is actually one of the interesting ways for you to grow and save your wealth over the long term. If you have been convinced, do let me know in the comments below. But of course, if you're someone who is already participating in the markets, I'll be interested to know which African stock markets you're currently invested in, and do also let me know in the comments below. And until next time, my name is Maro.